Hello traders, my name is Greg and welcome to a new video update. In tonight's video we will take a look on the euro dollar, dollar index, dollar Swiss, and also euro bond market. Okay, so on the euro dollar, as you know, we turned bearish few weeks back, and the reason is of course because of sharp extended weakness through this lower support line of this bullish trading channel, which is very important sign for a change in trend, very similar like we have seen in 2012 when the market was firstly bearish, but then we turned bullish after this breakout, which led to further euro strength. So of course we now anticipate something similar but in the opposite direction. So I'm looking lower here, and possibly this wave B running triangle is already in place here, and the euro will weaken significantly. But for the near term, actually not for the near term, but for the next few months I should say, we should focus on minimum 3-wave fall, okay, because this is a minimum structure of a corrective price action. So even if some other wave count is some other price action is unfolding here, we should still see at least 3 waves to the downside while this market trades below this latest swing high. So we are bearish, and the reason is also this line chart where fall is pretty clean, and it's looking impulsive, especially because of this sharp extended fall in the middle of this decline, which typically represents wave 3 of a 5-wave fall. Okay, so I think this is a 5-wave movement, and that euro found a peak here, and that we are headed lower. Okay, the reason why I'm so confident about this 5-wave fall, even if this decline on this bar chart is not so clean, but the reason why I am tracking this as a 5-wave fall is on German bond market. Just let me find this chart, okay, and you can see here that we can count clearly a 5 waves up from this low. Okay, it was low at the start of February. Okay, this was wave 1, wave 2, extended wave 3, nice wave 4 pullback, and now wave 5. Okay, so actually this euro bond is showing us very clean wave structure, and if we consider correlations between the euro dollar pair and this bond, then of course euro dollar weakness should also be considered as a 5-wave decline. Okay, in fact, as I said, here we have seen a low on February, at the start of February, and on our euro dollar, let me check here, top was in on February 1st. Okay, so actually correlation is very tight. In fact, let me check this correlation here. This is the euro bond, and I will now put also the overlay chart for the euro dollar here. Okay, just let me change this to line chart. We will make euro blue. Okay, and you can see here now very tight negative correlation. Okay, when the euro dollar is trading lower, euro bond is trading higher, and once again you can clearly see here a nice 5-wave rally. Wave 1 maybe expanded flat in wave 2, then this was an extended wave 3. We also have 5 subwaves within this wave 3. Okay, this was wave 1, wave 2, wave 3, wave 4, wave 5, and then we have a big wave 4 pullback, and now wave 5 rally. Okay, so if this is a 5-wave rally on euro bond, then this should be also impulsive fall on the euro dollar. Okay, so that's why I turned bearish on the euro dollar. But today, when the huge gap occurred lower on euro dollar, we can in fact see that on German Bund the prices is already reversing here, so maybe top for the fifth wave is near, and we definitely should see sooner or later a free wave corrective pullback, okay, back towards this wave 4 region. So if that will be the case, then of course this should support the euro dollar. In fact, the euro dollar gapped down into this what I believe is a wave 5, okay, but I'm not so sure if this low is in, especially not because this recovery is not impulsive, okay, and also this wave 5 was actually very slow if we consider that previous decline for the euro dollar were quite extended, okay. So I'm quite skeptical about this low here. The next thing is that this open gap, when it will be filled, usually will cause a reversal in primary direction, okay. So primary direction for the euro dollar, as we know, is now down, okay. The gap also occurred down, so when this gap gets filled, we really should pay a very close attention to these levels around 13060 or so, because if tested and reversed and maybe we will see an impulsive reversal lower, then I think this will be a quite strong indication that this open gap reacted as a resistance and that we will see push lower, okay. Maybe this will already happen from current levels, because in fact we already covered maybe more than 50% of this gap, okay. So I'm tracking also another wave count for the euro dollar, which is for now this second wave count. I labeled this as an alternate count, which in fact is showing possible end of wave 4 here and not here. Here we had this flat correction, this was a wave C lag, while here we made a little bit smaller red wave 4, but still in 3 waves, and then this decline, a very tricky price action, could actually be also an ending diagonal, okay. So if this gap will act as a resistance, and if we will see prices trading beneath this 131 critical level, then I think that this ending diagonal could be the case, because we know that in ending diagonal price action is overlapping, okay, and each leg of an ending diagonal has a corrective personality. So this could be a free wave down in wave 1, this free wave rally in wave 2, and now this could be first leg of a free down in wave 3, okay. This was our wave 3. Actually it is underway. In such case, wave B should reverse lower from this gap, that open gap that will react as a resistance. Then we will be looking for a free wave bounce in wave 4, and then another final free wave fall in wave 5 that will complete this ending diagonal, okay. So this is one of the possibility, but keep in mind that euro dollar is actually still trading sideways here. This is a ranged market, but that's why we need to consider different possibilities, okay. So we are actually still focusing on bearish view. I really like this scenario, but as I said, we must not see levels above 131.06, okay, because otherwise this wave count would be invalidated, and this wave count would actually then be confirmed, okay. But the main picture for the euro dollar that I wanted to show you today is that we have 5 waves down here, and that sooner or later we will see a free wave bounce in wave 2, and this is also confirmed by this euro bond market, where we also have a 5 wave down, and we are waiting for a free wave retracement. Maybe this will not occur from current levels, okay. Maybe we'll see another move to the upside and then a free wave fall, but the structures that I'm seeing right now suggest that euro weakness will continue, but that we will see some corrective bounce higher, okay. Now let's take a look also on dollar index. On dollar index we have been tracking this ending diagonal here, maybe already finished and I am still focusing on this wave count, but only if market of course will stay below these swing highs. However, this pullback from 82 levels should then be in three waves, because we know that if the market is headed lower, then and if the top was in here, then any bounces in the middle of this downtrend should prove corrective. Okay, and three wave structures are corrections. So this bounce should stay in a corrective manner, and we should not see any push above this 83.18. Okay, so while the market is trading below this level, this wave count, the first wave count on the euro dollar that I showed you, this one actually could be correct, okay, but we need to see some more aggressive push higher in a positive manner. So these are definitely some very interesting price action. If dollar index of course will just spike higher, then I think that the ending diagonal should be our primary focus on the euro dollar. Okay, so with this possible dollar weakness that I'm anticipating, or euro recovery, I'm also tracking this dollar Swiss very closely. Actually, I really like the price action. Firstly, let me check this weekly chart. As you know, we have turned bullish here after this spike, if you remember, in 2011. Since then, market made a nice 5-wave rally. This was wave 1, wave 2, wave 3, wave 4 triangle, and then a 5-wave rise in 5th wave, which completed this first impulsive leg labeled as a wave A from these levels. Okay, and we know that after every 5 waves, correction follows. So we have been tracking this wavy pullback for a while now, and we can see now that market is rising above this trading channel. So we definitely must consider a possible scenario for more dollar strength, okay, which also is matching with our euro dollar weakness. This is our long-term picture. We expect a rise, but on a daily chart we can see some pullback from recent highs, and this pullback should be corrective. Ideally, this is a completed 5-wave rally, and now we will see a 3-wave pullback back towards this support line. Okay, this broken support line here could now react as a resistance, as a support here. Okay, so this would be ideal scenario for a bounce higher from wave 2 lows. But as I said, for now I anticipate some dollar weakness, so which means dollar Swiss should move lower. In fact, on the next 4-hour chart we can count here 5 waves up. Okay, this was an extended wave 1, then we had 5 subwaves, then we had a 5 subwaves in this red wave 3. Okay, then we had a flat in wave 4, and then a final push higher into a new high in wave 5. Okay, but the very interesting thing is this price action, this sharp reversal to the downside that occurred last week, at the end of the last week. Also notice that market broke this rising trend line. Actually, this is also a trend line connected from these lows. If I label market as this, you can see that support was here, here and here, and now we have seen a breakout. So obviously this market is bearish, and on the next turned bearish, I should say. It's still not bearish. And on this daily technical chart, you can also see that price closed well below this support line on Friday. Okay, it was also weekly close below this trend line. So I think that we should not ignore a potential move lower on dollar Swiss, and in fact this fall was pretty sharp, and this pullback is actually very weak. Okay, just compare this price action to the previous price action, and you can see that this price action is much slower compared to this fall, very aggressive weakness. So this is actually a characteristics of a corrective movement. Okay, this slow price action, choppy price action in smaller range are usually corrections, while extended sharp moves are usually impulses. Okay, so I label this as a wave A, and I suspect this is a wave B. So I really like this scenario for dollar Swiss weakness here, while the market is trading below these highs. But we still need to figure out what the euro dollar is doing, if the euro dollar will bottom or not. For now, as I said, this rally from here is not impulsive yet. Okay, if in fact on this 30-minute chart you can see that it's actually a free wave movement, so it's hard to chase dollar Swiss shorts when you consider more weakness on euro dollar, but we know that those pairs will usually move tightly together, but in the opposite directions. Okay, so I will definitely keep a very close eye on these markets, and I really also like this alternate count for the euro dollar and ending diagonal, but because of this alternate count I'm not so convinced on this dollar Swiss potential short positions, but of course I'm observing it very closely. Okay traders, this is it, and I will catch you tomorrow. Have a good day. Bye.